OpenAI misses growth targets, sending shockwaves through the technology sector today. Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street. The S&P 500 closed down 42 points to roughly 7,130. The Nasdaq plunged 265 points to close near 24,620. The Dow Jones remained flat, dropping just 2 points to 49,170. The Magnificent Seven faced heavy selling pressure as artificial intelligence optimism quickly cooled. Names like Nvidia, Advanced Micro Devices and Broadcom fell between 2 and 5% during the trading session, heavily weighing down the broader market indices. Energy and mining were the winning sectors today as global commodity prices spiked. Technology and cloud infrastructure were the absolute biggest losers. Bitcoin traded lower to around $77,000. Gold dropped 2% to $4,600. Silver fell 2% to roughly $73.50. WTI crude surged nearly 4% to hit $100 per barrel. Our first major story is a harsh reality check for the artificial intelligence boom. OpenAI reportedly missed internal targets for weekly active users and top-line revenue. This alarming report raised intense fears that the massive capital spending on artificial intelligence infrastructure might be completely unsustainable. This exact news directly caused the heavy sell-off in the Nasdaq and the Magnificent Seven as panicked investors dumped semiconductor and cloud computing stocks. Our second major story is a historic and sudden fracture in the global energy market. The United Arab Emirates officially announced it is permanently leaving the OPEC cartel to monetize its massive investments in production capacity. Combined with the ongoing geopolitical blockade of the Strait of Hormuz, this shocking exit sent crude oil prices skyrocketing today. This massive energy shock fueled widespread fears of sticky consumer inflation and directly caused gold and risk assets to sell off as institutional investors aggressively braced for much higher interest rates. The 10-year Treasury yield advanced to 4.4%, hitting a 3-week high. Missing data, 10 to 2-year yield curve. The US dollar index rose to 98.7. The VIX volatility index held steady near 18. Rising real yields and a stronger dollar are increasing the opportunity cost of holding non-yielding assets, which entirely crushed gold today. The CNN Fear and Greed Index closed at 67.3, remaining stubbornly in greed territory. This implies that retail investors are still highly complacent and a further market drawdown may be urgently needed to flush out speculative positioning. Looking ahead, the broader market outlook shows a painful transition from artificial intelligence euphoria to a harsh reality of sticky inflation and higher for longer interest rates. Market participants must now carefully navigate this complex landscape of cooling optimism and persistent global supply chain blockades. Tomorrow, the Federal Reserve will announce its highly anticipated interest rate decision. Also tomorrow, Microsoft, Meta, Alphabet and Amazon will report their quarterly earnings, which could determine the entire market direction for the upcoming month. Apple will release its crucial earnings report on Thursday. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more. See you next time.